once you accept that we're in crypto winter, everything makes sense. We're no longer like waiting for one little piece of good news to give us a bounce. The performance we've seen in Bitcoin over the last few months starts to make sense. Actually, what happened is we've been in crypto winners since January, from January 2025 to about now. It always feels bad to buy at moments like this. We didn't feel like it was crypto winter because Bitcoin was down 6%. That's not crypto winter, that's like a mild cold snap. The bulk of OG crypto entered a full-blown winter in January 2025, and it was papered over in Bitcoin and Ethereum by $75 billion of net inflows into corporations and ETFs. So institutions were still in this summer haze, but the rest of crypto was in this dark, deep winter. And the reason that matters is the average winter lasts about 13 months. If it started in October, when many people think it started, when Bitcoin peaked, we're in it until November.
Today, while the market waits in anticipation for the next leg up in crypto, and as Bitcoin continues to fall, Bitwise CIO Matt Hougan gives us his update for the crypto market and why we're about to see an unbelievable recovery in just a matter of weeks. Bitcoin and the broader crypto market have taken a noticeable hit recently, with prices sliding sharply and volatility rising. With Bitcoin's price crashing over 21% just in the last month alone, it sits just below $73,000. And while corrections are normal in crypto cycles, this drop is a warning that digital assets remain highly sensitive to macroeconomic pressure, regulatory uncertainty, and shifting investor sentiment. Inflation concerns, interest rates, and global liquidity continue to impact risk assets like Bitcoin, sometimes faster than investors expect. Hougan explains that while speculators initially drive price movements, giants like BlackRock have entered the market and shifted the cycle by pushing prices in the decrease we've seen just in the last week alone. He also points out that historical trends indicate a parabolic increase in market cap in the coming months. With real money now flowing in, he emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency that will yield massive gains in 2026. Let's get right into the latest interview with Matt Hougan, as he gives his prediction for Bitcoin and the crypto market and where we're headed in the coming weeks. Drop your comments down below and subscribe if you enjoy the content we do here.
There are really three groups: Bitcoin, ETH, and XRP. It's down, 25% in the last week. This is the Leo in the Revenant crypto winter with ice dripping off of our face. That's the world that we're in. It always feels awful. If it started in January 2025, we're getting to the end of it and we're almost crawling our way out. That's my thesis. I think it's probably true. I don't know that we're at the very bottom yet, but I think we're closer to the end than the beginning. If you looked at assets that didn't have ETFs, if you looked at Sui, if you looked at Avalanche, if you looked at Cardano, they were minus 60 or 70%. They were in a full-blown crypto winter. I mean, you and I talked about this last year, how there was this sort of weird duality in crypto, which is institutional crypto was tremendously bullish and retail crypto was in the depths of despair. Even before we really broke down, you saw fear and greed at like 15, right? And it was showing that there was this deep, dark despair, but none of us could have accepted that we were in this winter because the prices were still doing okay and institutional flows were still doing okay.
We had great news all the time.
Great news all the time. Every piece of fundamental news was good. But look, if we didn't have ETFs and we didn't have $75 billion flow into Bitcoin last year from institutions, the price would have been down 50 or it would have been down 60. And we all would have known we're in crypto winter. Yeah, this is peak end of winter. And just think about the scale of selling by crypto retail. I mean, they sold $100 billion of Bitcoin roughly in the last year. It's a ton. It's a ton. And I think this is important for people to accept. You need to accept we're in a winter or else the news doesn't make sense. You need to accept we're in a winter or else you don't know what to look for. This is sort of classic 2018, classic 2022 style winter. And that is what you need to look for the catalyst to recover. It's not some isolated piece of news. It's going to be exhaustion, despair. It makes you more bullish when you get in this mindset and then you see the fear and greed index set yet another low. It makes you more bullish when you see leverage squeezing out of the system and people just folding it in and going to other things. Those are actually the signals that we're closer to a bottom. Again, I don't know that we're at a bottom, but we are closer to the bottom. And all the good news that we're papering over will come back when we get out of this bottom and we start to build again. I think it's a lot of OG selling, and not selling out of Bitcoin for what it's worth. We speak to a lot of these sort of OG whales. They're trimming their positions. They were trimming them ahead of a potential 4-year cycle. I think they're probably getting, again, close to done. They started this way back in January when Trump was elected, when all the news was sort of baked in. They started peeling back from the market. I think they're closer to the end than they are the beginning. So I'm starting to feel bullish for the first time in a few, maybe a few months, sort of really getting the itch that we might be getting closer to the bottom. The thing about those things that are negative on Bitcoin, they're all expecting this to be different than it has been for the last 15 years. This is perfectly normal. They just haven't paid attention to a crypto winter. This is what happens in crypto winter. And the people who step into it have historically been rewarded. I think you'll be rewarded again. But all the long-term trends are really good. If you can step out of this current moment and project yourself forward 5 years, when all assets are tokenized, when Paul Atkins has completed Project Crypto, when stablecoins are multiple trillions of dollars, when gold's at $10,000 an ounce, and more central banks are looking at ways to get outside of the fiat system, that's like a pretty good story for where crypto is. It's hard to imagine crypto being a $2.5 trillion industry in that kind of world. I think people are having a hard time getting from this current moment to that future. But I think if you dwell a little bit in that future, you know that a line has to connect us from where we are today to there. I think it's a bullish line that goes up and to the right. We have sort of 2 pathways to success and 1 to failure. Pathway 1 is we get a reasonable version of the Clarity Act passed. It now looks, according to Polymarket, that those odds are tricking up. So that's a great pathway. That cements the regulatory floor underneath crypto, and I think is a catalyst for a bull market. Pathway 2 is what Noel was saying. If we get too big to fail in 3 years, if all assets are tokenized, if stablecoins are a multi-trillion-dollar industry, it's making money for BlackRock and JP Morgan, if Coinbase is a multi-hundred-billion-dollar company, they won't be able to put this back in the bucket.
Embracing an unyielding enthusiasm for the Bitcoin realm, Hougan confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Hougan reassures that a long-expected surge awaits as we head into the second quarter of 2025. Now we'll hear Matt Hougan break down what implications crypto legislation has on Bitcoin and the market sentiment we can expect.
The failure case, and I loved how people pulled out of my memo the 1 failure case out of 3. But the failure case is that crypto isn't systematically important in 3 years. And that's why the Clarity Act is important. It removes that 3rd case from the scenario. I mean, that's been my sort of somewhat skeptical thesis toward the Clarity Act all along, which is you have that fundamental sticking point, and that's something where people will dig in. The only hope is that the lobbying weight and dollars of the crypto industry will get enough Democrats to hold their nose and pull it over the line. That's what you're betting on. And indeed, Fair Shake has raised like a couple $100 million. It's a big dog now in Washington. So that's what you're betting against. But I do agree that it will come down to ethics. Everything else is posturing and important topics, but they will find a middle path, and you're seeing that progress. And stablecoins, remember, are chump change right now. They're $300 billion. It's amazing that they could consign the US to second-class citizenship. For what it's worth, when I was in Davos, the Europeans were on the other side of that. They thought stablecoins were guaranteeing that Europe would be dollarized, and they were absolutely panicked about it. I think it makes me really bullish on stablecoins that people see them as being so important that they're making these extreme arguments. But this is what Washington does. It was just amazing to me how far the talking points got away from a $300 billion market that wants to pay 4% interest to regular Americans. It's wild to me. I mean, I do think if Clarity doesn't pass, there's a degree of regulatory capture for the largest in the industry. I think Coinbase does well in that world. I think ETH does well in the asset world. The lack of regulatory clarity locks in the few things that have made regulatory progress. So I do think Coinbase is a little bit on both sides of that equation. The terrible thing about stablecoins is there's no lobby for everyday Americans or everyday citizens around the world that just want to generate yield directly on their dollars. There's no one lobbying for that. There's the banks lobbying, there's the crypto industry with their rewards program. No one is lobbying for what should actually be true, which is that everyday Americans should be able to earn interest on the cash that they have. The other side of this being slow is the scale of these institutions is just absolutely enormous, right? 2 trillion, 5 trillion, 10 trillion for Morgan Stanley. If you start to see Bitcoin be 2.5% of that portfolio, the flows blow this out of the water. There's no amount of retail selling that can sort of stick their finger in the wall of that kind of capital flow. It's coming. It is coming. And I don't think the market pullback based on my meetings is going to stop that or reverse that. There is extraordinary interest. There's a top-down push from these banks, but it is slow and it will build over time. And that's just the market we're in. Again, it goes back to my thesis that it's going to be a grind. I think it's a 10-year grind that ends with Bitcoin well north of $1 million, but it's going to be a grind. It's not going to be a flood of money all at once. We're definitely going into gridlock. If we don't get it now, we're probably not going to get it. I think that seems pretty clear. By now, I mean before the November midterms. They're certainly going to try. You couldn't imagine or ask for a more pro-crypto SEC than we have right now. They're a little bit constrained in what they do, but they're certainly going to try. The important piece is the profit motive big enough for the big firms to build in this space aggressively, despite the fact that you could have regulation clear or change 3 years from now? And I think that's actually the initiative. I think the regulators will do all they can to make it as clear as they can, but is the profit opportunity large enough in the eyes of traditional finance to really start incorporating DeFi and really push on tokenization? My guess is that it is, for what it's worth. I think the profit motive is big enough for them to want to do that. So I'm optimistic. But the regulators will do their part. It will really be on the industry as to whether it can deliver or not. And I think that it will. I don't think crypto, for what it's worth, has thought about the scale of what tokenization means. The numbers are so much bigger than people imagine. Again, stablecoins are $300 billion. Equity is $110 trillion. It's like 300 plus times bigger. And I think it is inevitable. I think it's inevitable in the next 5 years. I think all assets are going to be tokenized 300 times bigger, 500 times bigger. That's the scale of what you're talking about.
Matt Hougan challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Hougan asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Hougan highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Hougan also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Matt Hougan underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Matt Hougan? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?